Hey, what's up guys? Nick here. In today's video, I wanted to share with you what exactly this Fed rate cut means for you. Stay tuned. Alright guys, so let's jump right into this. I wanted to keep this video short, sweet, and to the point. I'm not going to get into all of the crazy details about this Fed rate cut, but I wanted to film this video because I've been getting a lot of messages coming in asking me, Nick, Feds just cut the rate to 0. Does that mean I'm getting a 0% mortgage rate? Well, unfortunately no. But I wish that was the case, because if it was the case, I think we would all be jumping on buying a house or refinancing a house, although it is still a great time to do either one of those because the interest rates are still definitely low. However, we're not going to see a mortgage interest rate hit 0% anytime soon. All right, but I do want to talk to you about what this does mean for you, for us, for everybody right now, as far as what is going on with this Fed rate cut during this crazy time in our world with the coronavirus going on. As you can see, I mean, I'm at my home office right now working, which is my garage, in my home clothes, wearing a hat, not out in the streets right now doing my thing with my real estate business, but still here making my calls, doing what I have to do, as should all of you be doing. But let's get into the point of the video here. So now, what exactly is the Fed rate, right? I mean, some of you may be wondering, what the heck is the Fed rate? I'm hearing all this Fed rate cut, 0%, 1%, whatever it may be. Well, quite simply, the Fed rate is the actual rate that the Fed charges the big banks to borrow the money. The Fed lowers interest rates in order to stimulate economic growth, which is what they need to do right now with all this craziness that's going on in the economy. Lower financing costs can encourage borrowing and investing from borrowers like you and I. However, when rates are too low, this can spur inflation in the economy, which we don't want to happen, because inflation eats at purchasing power and can undermine the sustainability of the desired economic expansion. On the other hand, when there's too much growth, the Fed then hikes the interest rates once again here. So the Fed cut the rate to 0% on Sunday. Now, a week before that, they also made another cut. Now, why does the Fed cut the rate? The reason why the Fed cuts the rate is because they want to entice borrowers like you and me to jumpstart spending more money to help the economy. As we all know, the economy is taking a huge hit right now. I mean, we're seeing the stock market just tumble just like it did in 2008. The Dow is now down, I think, up to 3,000 points over the last week, going up and down. So it's beginning to look like a sort of a panic right now in the economy, and the Fed wants to do whatever they can to bring that economy back up a little bit. So the Fed rate cut is exactly why they do that. Now, what does this mean exactly for us? Well, for us as a borrower, if you have a high interest savings account, right now what's going to happen is you are going to see that interest rate come down. And that's just, it works across the board. We're not going to get away from that. The high interest savings accounts are controlled by this Fed rate cut, so you will see that interest rate come down. Another thing that is happening for you and I, which is on the positive side, now, yes, the savings account interest rate coming down is a little bit of a negative for all of us who have that high interest savings account. However, right now, what's going to happen for you as a consumer, if you have credit cards with high interest rates, well, the positive thing is you will see those interest rates come down a little bit within the next 1 or 2 billing cycles, so keep an eye on that. So to recap real quick, high interest savings account, if you have one, your interest rate will drop, unfortunately. The positive side, credit cards, your interest rate will also drop, which is a good thing. So let's move on to the other side of this, where I know a lot of you have questions about the mortgage interest rates. What is going to happen with the mortgage interest rate? Well, let's jump into that right now. At the time of recording this video, our mortgage interest rate is hovering right around the 3.7% for a 30-year conventional loan. Now, that is still a historical low for mortgage interest rates, but just about a week ago, we saw the interest rates go even lower than that. And then, of course, we saw the spike for these banks to try to get more money in as quick as possible throughout this turmoil. So now that the Feds have cut the rate to 0, we might see another mortgage interest rate drop. We just don't know when, and honestly, we don't know what that rate will come down to. Can we see these rates come down to maybe the high 2% range? It's very possible, but at this time, the Fed isn't going to control that. It's up to the banks who are going to actually control that rate. So right now, the way that the mortgage rates are going, we've seen them go up and down over the last few weeks. There's high volatility in the mortgage rate market right now, and for myself, you know, I'm thinking about refinancing my home as well, but right now may be the time. Now, I'm not giving you guys, this is not advice, this is just my opinion. This might be the time to just hunker down and wait a little bit until we see what happens with the mortgage rates after this last Fed rate cut. I'm assuming that these rates will come down. It's just a matter of time. Refinancing or purchasing a new home, it's really all about figuring out what is right for you. If you're going to refinance, that usually comes with a cost that's going to be added to your loan as well. So it really just comes down to what financial position are you in, and does it make sense for you right now? When we're talking refinancing, a good rule of thumb is to look for at least a 0.75% difference or drop in that rate in order for it to really make sense and play out in the long run for your finances and for that payment that you're going to be making. So guys, to wrap this all up, number one, the Fed cut the rate to 0%, which means that is now the percent that they are charging the big banks. Will the banks cut the mortgage rates down to 0%? No, absolutely not. Well, at least in my opinion, I don't think that will happen. However, we may see a drop in those mortgage interest rates within the next few weeks or month. We'll see. Nobody really knows what's going to happen, but we just have to keep an eye out on that. Number two, your high interest savings account, that percentage, it will take a little bit of a hit and you will see that rate come down, but hey, it's better than your normal checking account, I'll tell you that much right now. And number three, you guys, the final thing that came from this Fed cut rate is that your credit card interest rate will be reduced, so keep an eye out for that on your next 1 or 2 statements. All right guys, that's it for this video. I hope this helped you in some way to kind of understand what's going on here with the Fed rate cut and mortgage interest rates. If you have any other additional questions, drop a comment down below. I'd love to answer anything that I can. If this helped you in any way, shoot me a like right now, hit that like button and subscribe to this channel for more videos like this. I appreciate all of you guys. Spread the word and share this with a friend who you think it could help. Again, Nick Cardenas here. I appreciate you guys watching the video, and we will see you on the next one.